SIS in the spotlight. It has been a decent quarter. The management has managed to meet street estimates. The stock, though, is under a bit of pressure in today's trading session. Let's connect with Dhiraj Singh, the CEO of SIS, to talk about the road ahead for the company, the debt reduction plans, and whether or not there are any acquisitions on the cards. Thanks so much for taking time out. Let's begin by talking about your margins. Now, in this quarter, you've delivered a 4.7% margin. That has been a growth of about 100 basis points plus. What has been the drivers for your margin growth, and are you looking at further building up on this range of 4 to 5% when it comes to your margins?
Yeah, good morning. So if you look at our main business, which is the security business, that is the foundation of our India business, the margin on year-to-year basis has grown from 4% to 5.4%. And it has grown consistently over the 4 quarters. And we expect this trend to continue. We've always been mentioning we'll go to the pre-COVID levels by Q4 of this year, and we are on track for that. Whatever the learnings we've had in the security business in terms of margin improvement, those will now be applied to the other sectors, facility management and the international business. And the margin improvements in those segments will continue to move till Q4 now.
Upside in COVID came from when you are doing specialized work for hospitals, cleaning, sanitization, cleaning up of operation theatre, and that was the need of the hour. What is happening to that business? Because that time there was scarcity and there was a need and there was a premium. What is happening to that specialized cleaning stroke sanitation work?
Post-COVID, the good thing has been that the awareness and the expectation for overall workplace hygiene, not just in healthcare sectors, has been across all industries. And we've been seeing more and more of that. So in terms of the reliability and the consistency and the quality, whether it's in terms of the chemicals that we use, the metrics that we have, the technology that we have, the expectations from the client has only grown post-COVID, and that has helped the business.
Why is your international security business growing at only 3%?
Yes, if you look at the international business, there the COVID contracts had added significantly in the last year. Even with all of them going away, the international business has still managed to show a growth. Traditionally, too, over the past decade, international business has been growing at about 5 to 6% only.
Are you in that business? I mean, ultimately, shareholders would look at a combined business. If a business is growing at single digit, your India business is growing at double digit, what stops you from exiting it?
The international business provides a lot of hedge in terms of the cash flow, the balance sheet. So it's a good mix. Our focus, though, clearly remains on the India business. If you look at the EBITDA split, about 60% of the EBITDA comes from India. Our M&A activity is focused on India. If you look at the margin improvements, that has gone significantly higher in the Indian business. So India remains the key focus areas, but international helps in providing the overall diversity and hedge to our business.
Fair enough. Let's also understand then what is the outlook when it comes to your cash reserves. You have about 600 odd crores, 670 odd crores. Do you think that there will be some more acquisitions in the pipeline? What are the plans for utilizations of your cash reserves?
So we are always evaluating good opportunities in the markets, especially in the Indian market. As of now, also, we are considering 2 or 3 deals. Hopefully, in the next quarter or so, they might fructify. But we have enough adequate cash reserves to manage that.
Just break it down for us. In the long run, what is going to be your contribution from each of your segments, your security services in India, facilities management? I know you spoke about international as well. What is going to be your key growth driver, and how do you see each of these segments growing?
You missed the cash segment, which has been our star segment also. In the last year-on-year basis, it has grown 24% on the revenue and 35% on the EBITDA. The PAT of this business has grown from 0.5% to now 7%. If you just look in about 3 years' time, this business has doubled in revenues and quadrupled in EBITDA. So this cash business continues to be our star focus. And as we go more into banking, outsourcing, solution services, this will yield more on both the bottom line as well as the top line. Coming to the main security business, that will continue to to contribute the most. But the fastest growing will be the facility management business. It has grown more than 21% year-on-year basis, and we see similar trends for the future too.
All right, thank you for joining in and sharing with us your outlook on SIS, your business plans as well going down the line. Moving on.